The market shoots higher on CPI data. Are the bulls still in control? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market could push lower one more time before pushing higher, or could push directly higher, trying to form that diagonal count, and the latter is what we saw. The market pushed higher on the CPI catalyst before pulling back and then closing bullishly. Now the question is, how high can the bulls take it? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, trade setups, and our buy alerts. All right, guys, so the market moved within our structures today. They held support, and then they pushed up where they were supposed to. So let's jump into the chart and take a look. Okay, guys, so here we are on the 5-minute SPX chart. I've been on the SPX this week because of the futures contract roll on the ES last week. It kind of makes a muddled structure, so I wanted to keep it clean because it's very clean on the SPX. And so we got the 5 down, and I said yesterday we could get one more push down here in a lower move, but they did not give us that, and they pushed up high enough now to kind of invalidate that move. It's not completely dead. They did hold this high here, and the corrective depth theory says we can have a wave 4, but it is well over the 50% retrace of wave 3, and we know that when we break the 50% retrace of wave 3, the wave 4s rarely follow through with a wave 5 down. So I have taken that count off the chart for now and said that this was wave 5 down, as it is a very clear 5-wave move down. And the structure that we have up, I actually said yesterday we needed one more high for a diagonal. I meant 2, but I said 1 because we would have wave 1 up, wave 2 down, and then you'd have A, B, C for 3. Then we got 4 down, and then we'd have 5 up toward that 39.51 or so area on the SPX. So that's what we'd be looking at to complete a wave 1 structure. Being that it would be a diagonal, we would look for a pretty sharp sell-off after that, down into the 38.57 to 80 region, back toward this low here, and maybe possibly a little bit lower down toward 38.57, but we would look for a sell-off, pretty sharp, because coming off of a diagonal, that's generally what you see. And then from there, we'd look for a wave 1 up, a wave 2 of 3 down, and then start wave 3 of 3 higher. So that's what we would look for to get started with this move higher as a bullish count. Now, our second option is that this B wave was actually wave 1 down, and then where we have C here would be wave 2 up, and then we'd have 1 of 3 down here and be looking to make 2 of 3 to the upside. And if we have that move, it actually targets the 4002 area. And if we get to 4002, that is right by the 764 retrace of the entire move down, which is a pretty key area. So if the bulls can push up over that 4011 area on the SPX, 4011 to 4015 area on the SPX, that would be pretty bullish overall. But we would look for this move to complete around the 4000 level before then seeing a pretty strong sell-off to the downside that would break through 3800 and 3700 as well on our way down toward that 2900 to 2500 level. So it's a pretty key time for the bulls. It is still possible. It's not completely out of bounds that this is wave 3, 4, and we get one more push lower and then go up. That's not completely impossible, but with the move well past the 50% retrace, we just don't see it that often. So our two main paths that we're tracking are the bullish count that should hit about the 3950 area and then have a sharp pullback that holds support and then come back and take out that high, or the potential ABC higher that would point us toward the 4000 level on the SPX and just under that 764, and the bulls would need, or the bears would need to hold that level most likely in order to keep us from going to take out that top on the more bullish count towards 4300. So it's kind of an inflection point for both the bulls and the bears here. Over on the NASDAQ, okay, the NASDAQ's a little bit messier. Remember, we got this 130-point gap up that we have to move everything down to kind of get back to our old levels and make the chart look right. So we just have to imagine everything 130 points lower here. But in general, what we're looking for off of this low is we potentially already have one up in the NASDAQ and made the start of two down. We would like to see a little bit lower for that wave 2. This is a pretty shallow wave 2, but all in all, that wave 2 does project toward our target at 13,281 on the NASDAQ, which is right around that 1338 to 14,000 area that we would expect. But it is possible we do have a wave 1 higher with a 1, 2, 3, 4, 5, as the NASDAQ is a lot cleaner than the ES. But again, I just don't think this wave 2 is deep enough. We do see shallow wave 2s and strong bull moves, so it is possible, and the NASDAQ has held up way better than the S&P has during this corrective period. So it is possible we have wave 2 in, and we're starting to build one of 3 up, which would target the 12,250 to 12,500 area. Then we'd look for a pullback in wave 2 of 3, and then we'd look for a move up towards 13,000 after that. So NASDAQ does have a bullish setup in place, but they also have that more bearish count as well, where we have, as you can see here, wave 1 to the downside, wave 2 up, and then they're pushing up here. They're kind of at the limit of how high they can go based on this wave 2, but if we do remember the 130-point contract roll, they do have a little bit more room to go up here, and could have even, you know, had a 4 or 5 to complete wave 1 on the NASDAQ here and would make a new wave 2 and then come down. So there's a few different options on the NASDAQ because of how well it's held up and how it looks. It's possible that we had a bigger 4 or 5 and a bigger count, where instead of this A wave completing here, this would be wave 4, or this wave 1 completing here, this would be wave 4. The move up was wave 5, and then you get all of wave 1 completing here. So the NASDAQ's a little bit messier because of the contract roll and because it did not sell off and follow the fib pinball as well as the S&P. So we're kind of waiting a little bit on the NASDAQ to get a clearer picture. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. We just started our training programs, and our first one is the Elliott Wave for Beginners course, which does come with both of our memberships. In the first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video that's live where I go over where we are in the counts and answer all of your questions, and the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading individual stocks and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today. We're looking for the bulls to complete this bullish structure up in that 39.50 area. However, if we do see a strong push up toward the 4,000 area with no pullbacks, that can be a sign we are in wave 2 of 3, and the downside move is coming after that. The NASDAQ is a lot messier because of the contract roll and because of how well it held up in this sell-off. But it does look like we have the potential for a 1-2 setup to the upside, where the NASDAQ would be looking to break out sooner than later. They also have a potential to make a bigger wave 2 and then start down in wave 3 from there, similar to the ES to the downside. Guys, that is the market update for today. I will talk to you tomorrow.